Assalamualaikum to Madam Nur Faiza. We are from MAC2204E. We would like to present about segmental report for the company IJF Construction Berhad and interim report for the company Malayan United Berhad. Our group consists of 5 people: myself, Muhammad Hazim bin Harmadi, Amir Izwan bin Zakwan, Muhammad Akimi Azfar bin Zafri, Muhammad Amirul Haziq bin Ishaq, and Muhammad Aiman Afiq bin Hazli. Firstly, I will give an overview about the company background, IJF Construction Berhad. The company mission is IJF aim is to deliver exceptional construction services that meet the need of their clients while upholding the highest standard of safety. Their vision, IJF aspire to become a trusted and respected leader in the construction industry by consistently delivering innovative and sustainable solutions. Next, IJF Construction Berhad is one of Malaysia's leading conglomerates and is listed on the main market of Bursa Malaysia Securities Berhad. IJF Sdn Berhad was incorporated in 1981. The core business activity for the company is construction, property, industry, plantation, infrastructure, and others.
Next, I will explain about factors to consider having a segment reporting. They have 3 types of nature of business activity. The firstly is nature of product and services. Second is nature of production process. And lastly, class of customer. I will explain the detail in the next slide. Now, I will share about assistant manager responsible for the activity and the information presented to the board of director. For the assistant of manager responsible for the activity, the first point is inspect and review each segment. Second point is ensure high quality and consistency. The next is guarantee the best entity performance. Lastly, report to CODM. For the information presented to the board of director, the first point is CODM report to the board of director. Next is includes all internal and external segment reporting, and lastly, overall entity performance. Now, I will explain about nature of business activity in our company. For product and services, we provide a construction, property development, manufacturing and quarrying, infrastructure, and lastly, the plantation. For the production processes in our company is construction activity. In property development, we made a land, commercial, and residency. For the manufacturing and quarrying, we concrete the production and sale. For infrastructure, we port operation and tollway. Lastly, with trading and farming. Now, I will move to the class of customer in our company. The firstly is employee, owner, supplier, investor, customer, shareholder, and lastly is lenders. They have 2 types of segment, business segment and geographical segment. For the business segment, we have property development, construction, investment, manufacturing and quarrying, infrastructure, and plantation. For the geographical segment, we have 5 countries. That is Malaysia, Indonesia, Singapore, United Kingdom, and lastly is India.
Here's the tree of chief decision maker. In segmental report, we need to highlight quantitative threshold test, which is 10% threshold. We got 3 ways to calculate it by using either revenue basis, profit or loss basis, or identifiable asset basis. Next is 70% revenue requirement, and only revenue basis will be applicable for this test. And the entity need to make sure at least 75% of its overall external revenue is due to those reportable segments. Other operating segments that don't fulfill the 10% threshold test won't be considered reportable segment. Instead, they are be merged and disclosed under the categories for all other segments. IJF Corporation Berhad's basis of measurement will be based on reported revenue, which includes sales to external customer and inter-segment sales.
Based on the IJF Berhad annual report, the total external and internal revenue of 6,971,941 is used to measure the 10% threshold test of the company. Since there are 6 operating segments of IJF Berhad, the 10% test has resulted in 5 reportable segments and 1 non-reportable segment. As per calculation, the reportable segments are construction, property development, manufacturing and quarrying, plantation and infrastructure, has produced 35.58%, 19.8%, 10.73%, 13.42%, 11.46% respectively, whereas investment and others are indicated as non-reportable segments since it results below than 10%, which is 9.01%. From the calculation of the 10% test revenue basis, the 75% test is conducted by dividing total external revenues for reportable segment of 6101663 with total external revenue for all operating segment. The result of the 75% test IJF Berhad is 95.10%, which is exceeds 75%. Therefore, the existing reportable segments, which are construction, property development, manufacturing and quarrying, plantation and infrastructure, will remain and no additional segment should be reported. As shown, the new segmental report of IJF Berhad is reconstructed and reproducing 5 reportable segments and 1 non-reportable segment. The 5 reportable segments consist of construction, property development, manufacturing and quarrying, plantation and infrastructure, whereas the other 1 reportable segment is combined and disclosed under all other segments since it does not satisfy 10% or more. You also can see the total revenue of all segments is 6851157. The total profit is 8411455. Next is the total asset is 249,04181, and lastly the total liabilities is 11618052. Hence, the adjustment of the operating segment by both tests are essentials in determining the reportable and non-reportable segment, as well as the preparation of segmental report.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Aiman Afiq bin Hazili, and now I will continue for the advantages and disadvantages of segment reporting. So here, there are a few advantages of segment reporting, such as the first one is provide greater financial statement knowledge. Secondly, it aids potential investors in making smarter investing decisions. And finally, easy identification of the profit-making and loss-making units. Moving on to the disadvantages of segment reporting, there are also a few disadvantages in this segment, such as preparing a reporting segment will cost a lot of money. Secondly, it will consume a lot of time. And the last one, it is possible for the department to provide information on certain sectors to the reporting company. Now, let's move to the interim report MFRS134. So this is the contents that included in interim report MFRS134. Firstly, we have the basis of preparation of the interim report. Number 2, accounting policies used. Number 3, types of interim report prepared. Number 4, period for current and comparative. And finally, adjustment made by the company. For the basic of preparation of interim report, financial year end for Malayan United Industry Berhad is on 30th June every year. The interim financial report for this company is on a quarterly basis. The unaudited condensed consolidated financial statement have been prepared in accordance with MFRS 134 interim financial reporting. The unaudited condensed report, other than financial instruments, has been prepared under the historical cost convention, while certain financial instruments are carried at fair value in accordance with MFRS 9 financial instruments. Next, for accounting policies used in preparing the interim report is MFRS 116, which is property, plant and equipment, and MFRS 121, which is foreign exchange rate. For the PPE, all the item of property, plant and equipment are initially measured at cost, using the straight line methods to ensure the amount, methods and periods of depreciation are consistent with previous estimate and the expected pattern of consumption of the future economic benefit, and any changes are accounted for as a change in estimate. For MFRS 121, the functional currency is in Ringgit Malaysia, which is RM. The asset and liabilities of foreign operation will be translated at the exchange rate at the end reporting period, while income, expenses, and other comprehensive income of foreign operation are translated at the exchange rate at the dates of the transaction. There are 5 types of interim report in Malayan United Industry Berhad. Firstly, we have consolidated of profit or loss. Number 2, this is consolidated statements of other comprehensive income. Number 3, consolidated statements of financial position. Number 4, we have consolidated statements of changes in equity. And finally, consolidated of cash flows. I think that's all from me, and now I will pass to the next presenter. Thank you.
Now let's take a look on the period for the current and comparative of statement prepared by MUI Berhad based on the financial interim report. MUI Berhad financial year ended on 30th June. Here are the timeline for the current and the comparative period of the statement prepared by MUI Berhad. As you can see, MUI Berhad uses a quarterly basis. This means that each interim reported period will be reported for every 3 months consecutively. This slide shows more detail on the current and comparative period for each statement. As you can see on the left side, it shows the current interim period and its comparative on the right side.
Alright, let's look for adjustments made by the company to be included in the interim report. So first adjustments is related to inventories. So cost of inventory is 111,136,000 ringgit, and net realizable value is 100 million. So in determining cost of inventories, the company should choose the lower of cost and net realizable value. And since net realizable value is lower than cost, therefore the value of inventory as 30 June 2022 is 100 million ringgit. Now I'm going to explain situation 2 about the adjustments of depreciation. The following information was extracted from Malayan United Industry Berhad for the year. For the second quarter of the year ended 30 June 2022. Loss before taxation 6 months ended 30 June 2022 was 15,569,000. On 30th June 2022, the company realized that the new hired accountants overstated depreciation amount for machine amounted to 250,000 ringgit. No adjustment has been made, so I'm gonna prepare an extract of unaudited consolidated statements of income for the financial period ended 30th June 2022. Depreciation is expenses that include in statement of income, and is subtracted when determining the net loss for this company before taxes for the business. In the fact that this event occurred in the same year, loss for prospective adjustments, and company must adjust the statement of income by adding the overstatement amount back. Because depreciation was overstated by 250,000 ringgit, we are going to add back the overstated amount for the total net loss going to be 15,346,000 ringgit.
To be considered as an aggregate operating segment, an entity operating segment should have a similar economic characteristic, risk and return profile, organization structure, engage in independent or interrelated business activity, and be regularly reviewed through internal financial reporting. Once identified, the entity must report the financial information for this segment separately in its financial statement. This information include the revenue, expenses, and liability of each operating segment, as well as any additional information necessary to explain the performance of the segment. An interim report is a document that provides a snapshot on the progress made on the project, research, study, or business plan at a specific point in time. It is usually produced when a project is ongoing, and the report is intended to provide an update on the work complete so far and any challenges encountered. Interim reports are often required by stakeholders such as supervisor, investor, or client to keep them informed of progress and provide an opportunity for feedback or adjustment to the project. The report can include information on the project's goal, objective, methodology, finding, and a recommendation. It can also outline the timeline and budget for the project, identify any risks or issue, and propose potential solution. Interim report can be used to help identify any problem early on in a project and address them before they become more significant issue. They can also be used to ensure that the project is on track and meeting its objectives.
Next question is, if your company business segment reported does not reach 75% threshold test, what should the company do? So, if a company's business segment reported does not reach the 75% threshold test, it may need to take a few steps to improve its performance in the segments. So, here are some of possible action that the company should consider. So the first one is develop a plan to improve performance. So based on the analysis, the company should develop a plan to improve its performance in the underperforming business segment. Second, allocate resources. The company should allocate the necessary resources such as funding, personnel, and technology to support the plan's execution. Lastly, monitor progress and adjust the plan. The company should monitor its progress regularly and adjust the plan as necessary to ensure that that it is on track to meet its goal. So the last question is, if there are changes in the accounting policies in your company, what is the effect on your company's interim report? So if there are changes in the accounting policies in the company, the effect on the company's interim report will depend on the nature and the extent of the changes. So here are some of the possible effects that the changes in the accounting policies may have on the company's interim report. So the first one is restatement of prior period financial statement. If the changes in the accounting policies are significant, the company may need to restate its prior period financial statement to ensure the comparability. Second is disclosure of the changes in the interim report. The company must disclose the changes in the accounting policies in the interim report to provide transparency and clarity to investors and other stakeholders. Third is adjustment to financial report. Depending on the changes in the accounting policies, the company may need to adjust certain financial metrics presented in the interim report. Fourth is impact on the notes to the financial statement. The changes in the accounting policies could have an impact on the notes to the financial statement, such as the accounting policies section or the significant accounting estimate section. So lastly is changes in the internal control environment. Changes in the accounting policies could also impact the internal control environment of the company, requiring the company to modify its control and procedures to ensure the compliance with the new policies.